Now today we will take a look at the top 8 biggest technology companies in the world to see which ones are worth investing into and which ones aren't. Now obviously this isn't investing advice. Always do your own research. You also learn a lot from that. And as you can imagine, these companies move around a lot, so the order might be wrong. But before we start, I need to explain a couple of terms. 3 in total. The first one is economic moat. This is a distinct advantage a company has over its competitors, which allows it to protect its market share and profitability. It's often an advantage that is difficult to mimic or duplicate, like brand identity, patents, and other things, and so it creates an effective barrier against competition from other firms. Now, the second term is fundamentals. When I talk about this, I'm mostly talking about the financials of the company, like their profit margin, debt compared to cash holdings, and business growth. Aside from that, I'm also talking about the products and business ideas. And now for our last term, we have network effect. This is something you see a lot with certain networks, from email to the internet and even stuff like social media. The more people adopt it, the more you can get out of it. And the more people are also forced to enter the network. A good example is PlayStation, where Sony profits from the fact that people have to buy everything through PlayStation. Either games through the PlayStation Store, controllers from PlayStation, accessories from PlayStation, and other stuff. And if you want to play with people on the PlayStation Network, you need to be a part of it. This is something that plays a big role nowadays in companies. Now, with that out of the way, let's jump right in. First, Apple. Now this is a consumer electronics giant and has stayed on top by innovating and by creating what they call an economic moat. As soon as you're in the Apple ecosystem, it's really hard to leave because everything is connected and only works with Apple. Now personally, I can't deny that this company has amazing fundamentals. It has consistently growing earnings, strong cash flow, and low debt. All of this already makes it one of the best on the entire market. However, it has one big problem in my opinion. It doesn't really innovate enough. There are certain features and technologies that are now finally used by Apple that have been used by competitors for years. In a lot of ways, they are always one step behind Windows and Android, but their economic moat protects them from this. However, if that ever ends, they are certainly in for one hell of a fight. Now for our number 2, Microsoft. This company is most well known for creating the best software and technology solutions like cloud. And again, this company also has great fundamentals, a strong economic moat, and innovates constantly. Now, in my opinion, Microsoft is a lot stronger because in a lot of ways, it's always one step ahead. So personally, I would rather go for Microsoft than Apple. And also, compared to Apple, its fundamentals are even stronger. Now let's move on to our number 3, Alphabet, also known as Google. Now this is a good example of a natural monopoly. We all know that they own the biggest search machines in the world, but that's because they are truly the best. There isn't any other company that could beat them when it comes to this, and this gives them a huge advantage. Now, aside from having strong fundamentals, they have a strong network effect. More and more people will use their social media products like Google and YouTube, allowing them to make more money and get into contact easily with a huge client base. So personally, I think it will continue to dominate. Now for our number 4. Amazon. This is the e-commerce giant of the United States of America, a beast that consumes everything around it. And it does so by using 2 little tricks: low profit margins and innovating using technology. Every time they enter a field, they will do their best to be the cheapest, even if that means that their profit margins are ridiculously low, or even non-existent. And then, at that point, they will use technology to make the user experience even better, or just to lower costs. And so you can see that a lot of Amazon ventures work out pretty well. Now, aside from this, they also have amazing fundamentals, and again, a network effect, especially with their Amazon Prime membership. So personally, I want to hold this company for the long term. Now for our number 5, Facebook. Now, this is another social media giant, and just like the others we talked about, it has some special advantages. It has an economic moat, network effect, and strong fundamentals. However, this company is now also expanding beyond all of this by creating a digital world. And if this metaverse becomes a more efficient way of communicating, which it certainly can, then the network effect will kick in once again and it will grow exponentially. If it's a network that significantly improves on the older one, people will switch to it. So in my opinion, Facebook is another that's worth the money. And I mean, if I gotta be honest, their current products are still growing and making a lot of money. Now for number 6, Nvidia. Now, I like this company, don't get me wrong. Their products are great, and their financials are quite good as well. But there are 2 problems. First of all, their current value is just insane, with a PE ratio of more than 100 and a PAG ratio of 3.5. So I wouldn't buy it for these prices. Personally, I don't buy any companies with a PE ratio over 50. In my opinion, at that point, they are just too expensive. And the second issue is their inconsistent yearly growth. If you compare it to the others on the list, it's certainly less predictable. So even though this is a great company, it's just way too expensive. Now for number 7, the Taiwanese Semiconductor company. Now I bet a lot of you have never heard of them, but believe me, they are incredibly important for like the entire world. This company is the semiconductor manufacturing king and is by far the biggest and therefore most important player. Most of the semiconductors in your devices were made by this company. Now we all know that there is a chip shortage, and while this is bad news for a lot of companies, and also us, it's actually a good thing for this company. For them it means more work and more revenue, and they already have very strong fundamentals. And so personally, I will keep an eye on this company because I would certainly want it in my portfolio. Now for a number 8, Tencent. Now this is a stock that I have in my portfolio at the moment, and that's because this is one of the Chinese tech giants. It has quite a diverse range of revenue sources, from fintech to mobile gaming, and all of them are doing well. And even though it was hit hard by the China crackdowns and COVID, it's still on its way to increase revenue 15% year over year. And just like all the others on this list so far, it has strong fundamentals, an economic moat, and even in some parts of its business, a network effect. All of this will allow them to grow, even though times are tough. Now, thank you all for watching. If you want some more information on certain terms or like the businesses or whatever, I linked a bunch of resources and stuff down below and in the comments explaining certain terms that I use and other stuff, because it's just a lot easier to put it in text, and link to certain articles that can explain it better than me, and tell me down below in the comments what you want to see next.